Hi, this is Zach Mir from Zach's Traders Cafe with a look at some single stocks on Monday, the 25th of July. Starting off with Astrazeneca, and it looks as though we got this perfect bull flag breakout underway here after the near vertical move in the wake of the referendum vote last month. Also in the run up to a lightly golden cross between the 50 and 200-day moving averages. Those are the blue and black lines there respectively. View here is that the weekly close back above 4,600 could take the shares as high as the top of this rising June trend channel at 5,200 over the next 4 to 6 weeks. Stop loss at this stage back below 4,400. Next stock, Acacia Mining, also looking very strong indeed. Very similar pattern as well, with the near vertical push after the referendum vote, a flag situation, and then the lightly breakout for the end of the week. The view at this stage is that at least while there's no end of day close back below the 20-day moving average and the floor of this June rising trend channel at 507 pence, we should head as high as 700 pence over the next 4 to 6 weeks at last month's resistance line projection. CRH equally strong for the end of the last week. Progress within this rising trend channel from the middle of last month. Support at the 20-day moving average and the floor of the channel at 21.61. And while there's no end of day close back below that, the target here is high as £25, which is the top of last month's channel. That good double test of the 200-day moving average at the end of last month as well, which was rising. So that adds further momentum to the bull argument. On to Diageo, and the message here that even the most dull and slow-moving traditionally of blue chip stocks have been flying over the recent weeks. Here we've got the same vertical push since the referendum vote. In fact, the shares peaked, made a floor rather before that on the 14th of June, but a higher low for June the 24th rather, and then higher. The situation at this point is that while there's no end of day close back below the 20-day moving average at 2094, we're looking for a target towards 2350 at the top of last year's trend channel. There are some bearish situations around. One of them is Easyjet, where you can see that there's been failure after the gap to the downside, massive gap to the downside last month. Partial rebound there, but failed below the 1200 pence level and below the 20-day moving average level then towards that number. The view at this stage is that while there's no end of day close back above the 10-day moving average at 1114, there's the risk of a worst case scenario target here over the next 4 to 6 weeks as low as 800 pence, which is the floor of this falling May price channel. Back to the bullish situations, and Vedanta, not surprisingly, the mining stock are doing well. Bull flag breakout here after the straight move since the beginning of July. The view at this point is that while there's no end of day close back below the 10-day moving average at 521, we could head as high as the top of this rising November trend channel at 700 pence. The time frame on that move as soon as the end of next month. Finishing off with a property-related play, and that comes in the form of the online estate agent Zoopla. Here we had this island top at the end of June, gap down through the 50-day moving average, and then the latest failure back below the 50-day moving average at 292 pence. The view at this stage is while there's no end of day close back above that feature and the late May resistance line, we could head as low as £2.20 over the next 1 to 2 months. That's it from me. More updates at the same time tomorrow.